Assalamu alaikum.
السلام عليكم ورحمة الله وبركاته. بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين والحمد لله رب العالمين. Brothers and sisters, today we are having one of many events.
Matter, we're going to address our welfare, address our community, and address charitable giving, Islamic centers in the Muslim community. And I think this is really an extremely subject matter that we need to really make sure we pay attention to it. Like I said, this is one of many. There will be a lecture series. As you can see, when we're going through this, we're going to go very fast, right? Because every subject matter needs 2 hours, maybe 2 days, right? So we want to make sure to give an overview, and we have distinguished speakers here. We're going to give an overview of what we need to learn, at least to have an idea, and we come back with specifics later on with other lectures, inshallah. We have some distinguished speakers here. We have someone who really I cherish, that I work with for a long time, with him a long time, and he is really an authority in the field. Brother Monim Salam, he came all the way from Washington State to educate us. We also have Brother Hassan Janjwa, who is a very successful attorney dealing with those issues. He has represented many people with high assets, charitable giving matters. And then we have Sheikh Yasser, who's also going to speak, inshallah. So I'm going to start, and I'm going to give you an overview through my presentation, and I'm going to give you legal intricate issues that you might always think about. What happens if I do this, and then we live in the United States of America? What is going to happen? And then we have Brother Monim. He's going to speak about investment and tax savings, and then Brother Hassan, he's going to speak about how to draft the trust and the type of trust, and how we're going to also save in tax, and how we can give, but giving is really gaining, not giving to just give away. And then we have Sheikh Yasser. He's going to speak a little bit about the history on endowment and trust, how Muslims have flourished throughout the history, structuring those matters, financial matters, for the community, for the state. Obviously, we're not going to do it for the state. We're going to do it for our community. Specifically, because we're not going to do this for the state, it is very important for us to learn about this. So, and I will say, people were questioning why we're having this event. Is it for the institution or is it for us? It's for both. Really, it is for both. Because when you know how to structure your assets with halal, inshallah, you know how to protect your family, your loved ones, you will know how to protect your community, your masajid, your Islamic institutions. And that's really, it's everything intertwined, and there is no reason to say this is my issue, or this is only someone else's issue. Even if you don't have the money, it is your issue. And it's not about the money. Really, it is not. And I'm going to explain, for instance, how a will is not only about money. It's how to protect your loved ones and also protect yourself. How to be buried, how the health proxy works. And we have seen many cases around the country where families, they have no say when the state gets involved. And by the way, I want to mention this very clear to you. Entanglement of the state in the affairs, religious affairs of its citizen, right, is unconstitutional. So I want you to know that no state can get involved in your wishes as a Muslim fulfilling your religious duties. Because many people think, oh, you know what, but it's going to be the court and going to be, no. The court will respect your religious beliefs. And think about this. This is the only thing that you can do, and you feel free to do it without state involvement. Think about this. And if this is the only opportunity to have as a community to become successful, we have to pay attention to it. And the Prophet Muhammad ﷺ made it very clear, right? You cannot sleep 3 nights without having a will, right? So we are following the Prophet Muhammad ﷺ footsteps, and we have to. How many people they believe, and they do a lot of other things, but when it comes to this, it's not something we need to worry about now. We need to worry about now. And by the way, when I was here preparing for this, one of my beloved sister, her son came in, and he was saying, what is this? What is this about? And she said, oh, this is not something that you need not to worry about. We all need to worry about those things. You know why? I'll give you one example. One day, I got a phone call, someone who converted to Islam. He was young, 22 years old. Ramadan, he was fasting, right? His family are Hindu. He converted to Islam. He reverted to Islam, I would say. He was fasting in Ramadan, and he was driving and got into an accident. He died. He was cremated. He was cremated. Think about this, right? So the youth, everyone should have something and so have an interest to deal with this. So to start with, I want to mention a lot of people are business people as well, have businesses, and they have their own companies. Well, the first thing you do before even you draft a will or the trust, think about family partnership, which is life, family partnership, where you will have a plan, a lifetime planning. So what do you need? You need to reduce estate taxes, protect assets from lawsuits, and shelter assets from creditors. Family limited partnership is the way to go for people who have companies. It's very important because it's a limited partnership where the family can really protect their asset, and this is the only structure, one of the great structure to be able to protect your loved ones, your assets, and be able to not to worry about this. I have a case, for instance. I give you one example. I have a client in Texas, very wealthy, right? Like $40 million in assets. And they came to me and asked me to form a family limited partnership with the trust. And it gets a little complicated, right? But again, it can be simple as well. So when we created this, right after that, the government went after him. For some, I'm not going to go into much detail, but because this family limited partnership was established, protected the asset with irrevocable trust, could not even touch it because that's not his. It became more of someone else's decision. So think about this. So there is a structure where you will, and you can see here on the screen where you will be able to formulate that. And those are people who have companies that they can do this, right? And the limited partnership is something I don't want to get much detail. It's, partnerships usually are subject to liability. But when you form limited partnership, you can have all the other partners with limited liability. Only one doesn't have limited liability and can be only 1%. Then it can go only about 1% after your assets. 99% is protected. So you don't have to worry about that, right? So again, this is actually a subject by itself. And we need to learn as a community how we can protect ourselves. Because when you protect yourself, you're protecting the community, you're protecting the masajid, you're protecting the institution, you're protecting everything. So again, I don't want to go much detail on this. I just give you an overview on this. Now, a will. You know, the Prophet Muhammad sallallahu alaihi wasallam, there are many ahadith on how, and you can see some of them before you, where he really asked that people should have a will. And one of them is, and you know, it's also related to Abu Hurairah, the second one, that the Messenger of Allah, may Allah bless him and grant him peace, said, a man or woman might perform actions in obedience of Allah for 60 years, yet when they are near death, they live in a fair will and thus acquire the fire. Think about that. Now, what is the practicality of having a will of a trust in United States of America, for instance, right? So think about this. Even in Islamic countries, you have to do something about this, right? It's the urgency for you to take care of it in non-Muslim countries. And I give you the reason why. Where the state cannot get involved in your personal affairs. Where the states cannot do this, cannot, either court or anything cannot because of your religious First Amendment rights, what they call the Establishment Clause under the law, where the government cannot entangle with your religious beliefs. So, you know, and one of the things that I think you should know is that if you do not have an Islamic will, the state law will apply to you. And do you really want the state law to apply to you? And it's your choice. At the end, it's your choice, right? So, you know, there is what they call a right of election under the state law, and all states, they have that. But the spouse, the right of election for the spouse, but obviously the Islamic distribution is a little different from the state, where you need to address the right of election in Islamic, and the only way, so what they call it, I have seen many examples where husband and wives, they get their wills, Islamic wills, and then there's a dispute, right? When one dies, they contest the will, and becomes really crazy, right? So what I do, I advise my clients, if that's what they want to have a waiver to right of election. To right of election is only for the spouse, by the way. It's not for anyone else. And this is a public policy, which means he cannot go against state law. However, a person can waive that through, when you draft a will, you can have the spouse waive that to have the religious distribution. Now, and obviously, if someone dies, like I said, there will be the state law applying to the assets of the testator. In this case, he was not the testator. He did not have a will, or she did not have a will. The other thing that I like to mention, practical. You have to be practical. A lot of people come to me and say, oh, you know what, I can just download something from the internet and do it. Please don't do that. I mean, I tell you, maybe you do it. If you do it, you think it's fine, there's no problem. The problems start happening after the person dies, not during his lifetime or her lifetime, right? So you don't want to have fights after the person dies, right? So you want to make sure that you are dealing with that. So you follow the process, right? It's okay to have religious principles. And by the way, there are some articles on the tables that I had those articles and explain in detail exactly on all of these issues that you can read them and we have questions, you can ask questions at the end. But I will say the process, you know, obviously state law, the procedure is very clear. And you can follow it. You're not going against Islam by following it. You just follow that process and you're covered. Testator must be 18 years old. The signature must be the end of the documents. All of this are very, very, and also, you know, there is a law that, like in New York, for instance, it has to be 30 days. The witnesses, they have to sign the documents within 30 days. Otherwise, it's not valid. The will is not valid. In New Jersey, it has to be a reasonable time, but you don't leave it to reasonable time, discretion to the court, because it can be a problem if you do that. And then there is what they call, I'm going very fast because I know there's a lot to cover. So there is grounds for challenging a will. And if you go, so, and the reason why I want to address this one, because there is a way how to avoid it. People will say it's not validly executed will. Person was not state of mind. You know, they always see that all the time. And then person doesn't have capacity to do it. He was pressured and due influence, right? There was a fraud. There was a mistake. How to remedy that before it happens? Goodness. There is what they call no contest clause. It will make it difficult for a person to challenge a will when you have them sign the no contest clause. So, and which is interesting, right? If you challenge it, that you lose everything. So you have to have, in Islam, you don't make, by the way, and then inheritance law with Surah Nisa, it's very clear that no one can disinherit their families. And it goes by, from the spouse, the mother and the father, and there are conditionals. Everything is conditional, right? If you have a son, then the siblings will not get anything, right? So if you don't, the siblings will get. The mother, father, they need to get. They have. It's under Islamic law. They have to get part of your bequest. So, and Islamic will can be protected in non-Muslim country this way, right? Now, wasiyah, which is the next. Wasiyah. Obviously wasiyah, and you see the hadith here, Sahih Muslims, about that Mus'ab ibn Sa'd reported an authority of his father. He was ailing. He sent a messenger to Allah, to Prophet Muhammad sallallahu alaihi wasallam, saying, "Permit me to give away my property as I like." He refused. As again said, "Permit me to give away half." Again, he refused. And he said again, "Then 1/3." And the Holy Prophet observed silence. I asked permission to give 1/3 away, and he was allowed to do that. So that's wasiyah. 1/3 of your asset can be given as wasiyah. And the intricate part is, wasiyah cannot be given to people who are legitimately going to inherit from you, right? However, for instance, if siblings cannot inherit from you, you can give them wasiyah. But if they do, you cannot, right? And this wasiyah, it's crucial in this country. Why? We have mixed marriages, right? Because no Muslim can inherit from a Muslim and vice versa, right? So wasiyah can be, you adopt someone also. You adopt a child. That wasiyah can apply to that. So, and specifically, because of mixed marriages and because we live in a society that there are Muslim and non-Muslim, wasiyah becomes extremely important. And by the way, it's funny because I do consider a will, Islamic will, in United States of America is a wasiyah altogether. Really it is, right? You're drafting a wasiyah with Islamic principle, right to inheritance, plus 1/3 that if you choose to go to people who do not inherit. By the way, wasiyah can be also to a masjid, right? Wasiyah can be to a not-for-profit organization. Wasiyah can be to anything. So that gives you that way to be able to distribute your wealth as required under Islamic law. And also, one of the things I'd like to mention, please do not draft a will that says according to Islamic principles. You will be rejected in court. The judge needs to understand what is the Islamic principle. You need to really specifically state exactly the principles. And I do have some, I have a will, like Brother Hassan can tell you this. When you draft like a regular will, it's very simple, right? Islamic will is very complicated. And you have conditions, you have appendix, you have this, and you have this doesn't exist, this is what you do, this is what exists, what you do. But the judge, if it's contested, the judge will have to see all of that. But if you draft a simple will, the judge is going to be, what is this, right? So you want to make sure that is all done properly. Now, I'm not going to go much in the trust because Brother Hassan, I think he's going to address those ones. But the trusts are ways for people to protect the assets, protect their wealth, protect the family, and protect the institution they belong to. Because with those assets, you can really distribute them in a way that is beneficial to the community, to your loved ones, and to yourself. So, again, what I think will be good, when you draft a will or a trust, I will suggest to put in there a provision that this go to Islamic arbitration where there will be Muslims, imams, and people who really understand how this will be true, to be able to adjudicate your issues. And you make it binding. That way the court will have to accept it. It will be enforcing court, rather going to a judge who does not understand or she does not understand anything about Islamic principles. So it's always good to have that. Now, I'm not going to go into the trust. I said there are a few slides here, but if you go to health proxy, anyone heard about Charitable case in Florida? You remember that case? That's why the health proxy will be please do not leave your loved ones deciding how you will die if you're in hospital and everything. And Islamic law, Islamic principle is very clear, right? And I'm sure if you ask Sheikh Yasser, he will explain this to you. But also protect your family by not giving them the headache, having to fight with the state, but your welfare, your health welfare. And Charitable case it's a clear case. It happened about 10 years ago, I think. Oh, yeah. So I can't believe. Wow. Yeah. So that tells you a lot, right? So I will say, please do not leave that to your family to fight with the state. And finally, I will just say this: please don't think that will and trust is only about money. I mentioned this in the beginning. It's about how you want to be buried, where you want to be buried, and how you going to ritual are going to happen. And I gave you the example how the Muslim, someone who was Hindu and converted to Islam, he was 22 years old, get in an accident, and then he was cremated, right? And it happened in Queens, actually. So, Jazakum Allah khair, barakallahu fikum. And inshallah, I am going to introduce the next speaker. I'm doing both, as you can see. So, the next speaker is Hassan Janjua. Hassan Janjua focuses on estate planning, not-for-profit counsel and general corporate counsel. He works closely with individuals and high net worth family offices to tailor wealth plannings for them. His knowledge of estate tax consideration at both the state, federal level allows him to participate and proactively incorporate tax savings provision for his client while keeping in mind their personal financial operations. Brother Hassan, the floor is yours.
Assalamu alaikum. So I'm a fidgety person and I move around, so I'm just going to keep this with me. In addition to the disclaimer up there, I have two more disclaimers. One, there are rumors going around that I'm really a farmer. Don't believe those rumors. And don't believe the people who are spreading those rumors. I do have some farm animals that I got for my kids, but I'm not really a farmer. And number two, I'm not really going to talk about trusts too much. As Brother Umar was mentioning, I know there's a long list of, or a great panel of speakers, so I'm going to try to go through quickly. I'm going to focus on just one topic within trust, which is charitable trust, that I'll talk about. But the goal here is just to define a few things about planned giving, and then talk about a couple types of charitable trust. And I don't think we'll have time for questions, but inshallah, we're here throughout the day, throughout the evening, so we'll have time for maybe one-on-one questions. Yes. Okay, hold it from here. Okay, there we go. Now, causing problems already. Okay, so what is planned giving? Planned giving, very simply, is just a way of donors supporting nonprofits that enables larger gifts and mutual benefit. So, one of the beautiful things that I learned about our community, and, I think Brother Munim can probably talk about this more too as well, is we are one of the most affluent communities in this country, but we are also one of the most giving communities in the world. And what I came across with clients many times is people not looking for even a tax deduction when they're giving their donation. Many times I've seen this where people are like, my reward is Allah, I really don't want anything to, I don't want any benefit from it, let alone getting income back from those donations, right? But the point, and I'll say, this is something that I'll mention at the end, is not necessarily for your own benefit at the end. But it is very important to take that benefit, because if you don't, the IRS is. That's the alternative. So there's three main types of buckets of planned giving. Number one is, that I'm going to touch on. There's probably a lot more than this, but number one is donation of appreciated assets. Brother Faizan is here. Does Al-Falah have a brokerage account set up to accept appreciated stock donations? That'll happen this week, inshallah, right? Before the end of the year, so everybody can donate their appreciated stocks to Al-Falah. That's very low-hanging fruit and very easy, and I think you might touch on that a little bit more. I'm going to talk more about topic number two, which is assets that return income or other, what other financial benefit is there in income? I guess tax benefits, but that benefit the donor in return for the contribution that they make to charitable trust. And the third one is donations payable upon a donor's death. I will pose a question to Sheikh Yasser before his talk, but from a secular perspective, I learned this at a CLE that I took, that it's better to give charitable contributions during your lifetime from a tax perspective. Why? Number one, because you have income. So when you pass away, you don't have income. But during your life, you have income. So when you make that charitable contribution during your lifetime, you can offset your income. Number two, you can also enjoy the fruits of that charitable giving that you've given. So I hope you have a chance to maybe address the benefits of giving, during your lifetime as opposed to at your death. So that's the third kind. Okay, so types of donations. Well, there's three main types of donations, right? You can give a completely unrestricted donation, which is what most of us do, which you put the money in the donation box, or you write a check to the masjid or the nonprofit and say, do whatever you want to do with it. You have temporarily restricted donations, which is something that these charitable trusts that I'm mentioning are, which you say for a finite period of time, I'm going to put a restriction on what you can do with the money and what happens with it. And then afterwards, it's yours. And then the third ones are the permanently restricted donations, which are like the awqaf or things like that the principal can never be touched. Okay, well, I already went over this. So I'm going to talk more about the temporary donations, temporary restricted donations, which are the charitable trusts. But permanently restricted donations, like zakat is a restricted donation, although it's distributed if you give to a building fund or if you give to an endowment, which, inshallah, again, to put you on the spot, that's something you're working on, I'm sure. Okay, so charitable trust. What is a charitable trust? How many people have heard of a charitable trust before in the room? Okay, great. MashaAllah. I love charitable trusts, and it's honestly the first question I get when I talk to people about this is, or clients especially in structuring something like this, is wait, is that legal? And yeah, it's absolutely legal. There's two types. Basically, you create an irrevocable trust that's established for charitable purposes, where the donor maintains some sort of an economic benefit, and then at the end, the charity also, or during the period of the trust, or at the end, the charity also gets a benefit. And the two main types are a charitable remainder trust, which is a charity is paid, gets the benefit after the end of the term of the trust, and the donor basically gets a payment during the trust of the term. And then the flip of that is a charitable lead trust, where the charity gets income during the term of the trust, and the principal comes back to the donor or to a designee of the donor. Okay, so first I'll talk about the remainder trust. I don't think there's many different variations of this, but I won't go into that too much. But I'll just kind of touch on how does the charitable trust work, the remainder trust work. The charitable remainder trust starts with the donor. So one of the things that we need to kind of rethink is the long-term financial sustainability of our Islamic institutions is not the responsibility of the board or of the people running the masjid necessarily. It's of the community. Donors and people who have been successful financially probably are better equipped to generate wealth for the institution than maybe the volunteers who are working at the institution or spending all their time busy on the operations of the institution. So it starts with the donor, right? The donor creates an irrevocable trust. And Brother Omar touched on what an irrevocable trust is, or a trust is. It's basically a contractual agreement where something is put into a trust for a certain amount of time, managed, and then distributed at the end of that. So the donor creates irrevocable trust. The donor transfers, once a trust is created, an appreciated asset into the trust. Then when the charitable remainder trust acquires that, and you can have the trustee of that, who's running the trust, is someone that's chosen by the donor. The trust sells the asset at fair market value. The trust then reinvests it. The donor gets income for a fixed period of time, 10 years, 20 years, or their lifetime, however you want to designate it. After that period is over, whatever is left in the trust goes to the charity. So this is kind of a graphic that highlights that. But when I was putting together these slides, I looked at what I did at the end, because year end, usually we end up doing these type of presentations. And so I was doing a presentation on last year, on December 10th, I guess 2021, and I gave the example of Tesla shares, which I was going to take this out and try to find another stock to give an example, but then I was like, you know what, Tesla's a very good example. Because think about this. So if you bought $10,000 worth of Tesla shares on April 3rd, 2020, on December 10th, 2021, it was worth almost $106,000. So say at that point you decided, I'm going to create a charitable remainder trust. If you created a charitable remainder trust that was going to go for 10 years, that was going to pay you 5% every year of that amount, that's the structure of the trust. You would immediately this year get a tax deduction. It would be as though you donated $57,000 to the masjid. That would be just from the IRS's perspective. It would be the equivalent of getting a donation receipt from the institution for $57,000. So that means you would get a $21,000 credit on your taxes estimate. These are rough numbers. On top of that, now the charitable trust has the $105,000 of stock, right? When they sell it, they pay no capital gains tax, right? There's no income tax on the charitable remainder trust. It's a tax-exempt vehicle. So you save $30,000 in capital gains tax. And then over a 10-year period, you get 10%. You get 5% of the annuity payment, right? So that ends up being about $53,000. So the total money that comes into the pocket of the donor, or the total benefit to the donor, is $105,000. Just about. It's about $1,000 less than the stock, right? That's real, actual, tangible, like benefit to you. Now, if the charitable trust just sold that stock and put it in the bank and just paid you $5,200 a year for 10 years, they would have almost $53,000 left, right? So they would get $53,000 at the end of that 10 years. So that's $56,000 right there of money that just created, and the IRS got nothing. This year, now, if you held on to that stock, it's worth about $47,000. Still a good gain, but a lot less than this, right? So you would have made a lot more money if you had sold and put into a charitable remainder trust. So I know I'm going really fast and I'm probably mumbling and I'm not making like exact sense on every point that I'm making, but just if you leave with nothing else, just think about this, that if you had that stock last year, the IRS gets nothing, you get you generate a total of $155,000, that 100 of that goes to you, basically the full amount goes to you, another 50 goes to the charity, in 10 years obviously, and the IRS gets nothing. It's a win-win-win for everybody, except the IRS. And there are many iterations of this that you can do to benefit yourself and benefit the institutions that you want to support. I would say, I wrote this actually down on this slide, but then I deleted it because it didn't sound right. But I would say that it is irresponsible for a donor to give who's giving larger donations to an institution, who obviously is a person of means, to just write a check. You can do better for your institutions than just writing a check from a financial perspective. Okay, so I think I've gone too long, right? I don't think we have. I should probably wrap up. But the flip side of it is a charitable lead trust, which is where you basically put a pool of money into the trust. The trust generates income, and that income goes to the charity. And then at the end of that term, you get the money back. And there are some benefits to that. Although with the interest rates going up the way they are, the charitable trust is not as attractive as it used to be when the interest rates were nothing, because of just the calculations that the IRS does. But here's an example of a basic charitable trust. If you were to put $50,000 into a charitable lead trust and put it for 10 years, 5%, basically the institution gets $25,000 over that 10 years, and you get to take an immediate tax deduction of almost $19,500 this year for all the donations that are going to be made in the future 10 years. The catch to this is that this is not a tax deductible trust, so whatever income the trust generates in the next 10 years is going to be taxable to you, to the donor. So that's just a catch to it. But yeah, so these are the different comparisons. But again, conclusions, donors have to drive this. You have to be innovative and strategic in order to get the best support for the institution. Plan giving actually can, Brother Omar talked about Islamic estate planning. This is actually a very powerful way of incorporating Islamic estate planning and giving to your beneficiaries. And then also retaining a benefit from your donation means that the IRS gets less. It's not that you're taking away from the charity. So it's very important to utilize these tools.
Jazakallah khair. I think it's silent. I don't know if you're bored or you like it or you're not sure exactly what it is. We know this is a very complicated subject, and that's why we need many of these. We really need many of these. But this is very helpful to our community, inshallah. So I just like to ask a question. How many people have wills here? Wow. How many people have trusts? We're not doing our job. Us, not you. I think we need to really make sure that you all will have a will and will have a trust. How many, I guess, whoever does not have a trust does not have charitable trust, right? Makes sense, right? Anyway, I think there's a lot to be done for this community, for the Muslim community in general. And I think those are complicated subjects. And I do believe the Jewish community, they know how to take advantage of it. We don't, unfortunately. So the next speaker is Munim Salam. He is the Executive Vice President Director of Satuna Capital. We're really honored and happy to have him here. In 2003, Munim served as Director of Islamic Investing and Deputy Portfolio Manager for Amana Fund. And then he moved to Malaysia 2012. In 2000, he was still working, he was overseeing operations there. You know, Malaysia is known for Islamic finance, right? So, and that's the reason he went there. In 2018, he returned to the United States. He's portfolio manager of Amana Fund and Developing World Funds, as well as an investment management account and deputy portfolio manager of Amana Growth Funds. He's an adjunct professor at IE Business School and speaker at Islamic Finance Investment Conference worldwide. That's true. I mean, he is really an authority in the field, and really lucky to have him. Without further ado, I'd like to invite Brother Munim to the podium.
Assalamu alaikum wa rahmatullah. Bismillah, alhamdulillah, salatu wassalam, rasulillah. So first of all, I wanted to thank Omar, the board, for allowing me the opportunity to come. I think both Omar and Ahsan hurried through things, so they gave me more time to be able to speak. So if we're okay with you, I'm going to spend the next 2 hours or so talking about, just kidding. Okay, so inshallah, what I'm going to do is I'm going to slow down a little bit because I think it's important for us to be able to focus on this, and it probably wouldn't be a good idea if I flew across country for a 10 minutes presentation. So I'm going to spend maybe about 15 to 20 minutes, inshallah, open it up for questions. Maybe Sheikh Yasser can come up afterwards and talk about that, about his talk as well. So my topic is really going to be, you see now it's not working. It was working earlier, right? Okay, that's fine. I'm just going to use it? You know, I was telling the brother, as soon as you test it, it works really well. But when you get up on live stage, it never works. No, I'll get it. I'll do it. I'll do it. Yeah. It's probably easier for me to go forward. That's probably what's not working. Yeah, okay. So, normally when I start off, my compliance department always tells me that I have to make a disclosure. And that disclosure is that everything we talk about over here when I talk about the funds, if I do talk anything about investment returns or those type of things, just remember that future performance is not a measure of what's happened in the past. It could change. You can lose your money, all of those different types of things. So just keep that in mind as I'm going through this presentation. What I'm going to be doing in this presentation is really talking a little bit on subjects that both Omar and Ahsan mentioned, but I'll start it from a little bit of a different angle, and that is that, you know, as we're preparing for 2023, what are some of the things that we need to think about between now and the end of the year, which is only about 14 days, but there's still opportunities for us to be able to invest our money and actually do it according to Islamic values, and at the same time be able to save from taxes, which, if you can tell, has been the theme of this entire night tonight, which is how do we deprive the IRS of more money. So before I do that, inshallah, there's one thing that I wanted to mention, and that is, what does it mean when people say, you know, according to Islamic principles, Sharia-compliant investing, halal investments, all of these different types of things. So this is a very, just one slide that I have up here. When we look at our screening process, meaning we take 5,000 companies on a monthly basis that are trading in the public markets, and then we screen them to what would become something that would be halal for us to invest in. And these are the criteria that we use when we're doing that. Now, these criteria were created for our purposes when we started back in 1986. They've been kind of developing over the years, and these particular ones we adopted back in 2001. There are other criteria that are out there, but really there's pretty much a consensus about the main ones. The minor ones are we can talk about those later maybe, but there are minor differences that you'll have, whether it be from Malaysia to Southeast Asia to the GCC, and now in the U.S. as well. There is this consensus on what that means. The other thing about this is that there was a general consensus amongst the scholars that there was a need in the Muslim community to make investments in the stock market for multiple reasons, right? Interest you put in a savings account not allowed. You can't really buy a business $100 a month. You can't buy a real estate property with $250 a month. So there were needs for us to be able to save for the long term or invest for the long term. But then how do you do it in a halal way? So this is the way that our scholars told us how we actually do that. Number one is we would call a qualitative screen. A qualitative screen basically means that we're taking out companies, right? It's a negative screen, taking out companies that deal in anything that would be against the Sharia. So no alcohol companies, no tobacco, gambling, pork products, banking, insurance, those type of things. Now here, there's an absolute consensus, right? Nobody's going to argue with you that is really alcohol companies okay to invest in or not okay. So these are pretty standard when it comes to what is excluded whenever we're looking at what is halal and what is not. Number two is the secondary screening we have to go through. Looks at quantitative. These are numbers that we're looking at in the company's balance sheet. And this is a way for us to be able to limit a company's exposure to any kind of interest or other haram things that they might be involved with. Number one would be a total debt to market cap ratio, and that has to be less than 33%. We have a cash and accounts receivables, total assets at less than 45. And then we have an ancillary business screen that we look at has to be less than 5% of overall revenues that could be coming from some type of a haram source. So give you an idea, best way to explain this is to give you an example. So let's supposing we were looking at, one of our analysts said, what about Southwest Airlines? So Southwest Airlines, it's in the business of transportation. So nothing inherently wrong with that, so it would pass the first business screen. Then you look at these other ratios. First you look at Southwest Airlines and how much debt do they have? Now typically airlines have a lot of debt, so they would be excluded from the screen, but Southwest actually leases their planes. They don't actually buy them. So it would pass the first screen for the total debt to market cap. The second one, account receivables to total assets. What are we doing here? Whenever you want to buy a ticket, you either put it on your credit card or you pay it online with some there's no IOUs, right? Like you can't tell Southwest Airlines, let me fly now and I'll pay you back a year from now. So there's no accounts receivables to speak of. And because of that reason, then this ratio would be very, very small. Now you come to the last one, which is the ancillary revenues that Southwest Airlines has that would be not allowed. Anybody can think of any ancillary revenues that an airline would have? Alcohol on their planes. They do sell that, right? So they sell that alcohol, and so that we have to look at exactly how much of all overall revenues Southwest Airlines makes from that. And in this particular case, it's less than 0.5%. In the case of Southwest Airlines. Really, in most of these companies, the revenue sources of it is not really what we were thinking about because they're usually very, very small. What we were thinking about was, remember when the funds came out, this was back in about 1985. Can anybody remember, and if anybody was around, I wasn't, I was not even born then. Just kidding. How much the interest rate was in a savings account in 1984? Yeah, exactly. It was 15%. right? 15%. So the way the last one, the less than 5%, was violated was not because of any ancillary revenues. It was the cash that the companies were keeping on their balance sheet would be earning 15%. It's quite a bit. And so we've had an unprecedented amount of 0% interest rates and all of these things. We're coming back to this era of higher interest rates. And so this is going to become more and more of a something we have to watch very, very carefully. Okay? And then the last one I wanted to mention is all of this that we do has been approved by our Sharia advisor, which is known, the company is called Amani Advisors. On our website, you can go there and there's actually the actual fatwa that's there. And then on a quarterly basis, the advisor actually audits all of the stocks that we own to make sure that we're following our guidelines. And then they actually publish a signed report, and that we also put on the website. So if anybody's interested, you can go ahead and look at that. So that's one thing that I wanted to mention. Number two, what I wanted to do was we talk about, so it's important to, now that I've given you this criteria, to think about it from your own investment's perspective. Between now and the end of the year, make a commitment, say, you know what, now at least I know what's allowed and what's not allowed. How do I get my portfolio to reflect that? And if you have any kind of stocks in there that are not allowed and they have a significant gain, well, guess what? You can donate that amount to charity, right? Masjid would benefit from it. You would benefit by not owning it anymore. And then you can put whatever assets you do have that you want to replace them with any type of a halal stock. Now, the second thing you want to think about between now and the end of the year is asset allocation, a balance between all of the different stocks or mutual funds that you own. Because it's really great to be able to pick the winners, because everybody last year around this time only wanted to buy the growth companies. And those are the growth companies that are down literally like 50 and 60% this year. The Tesla that Ahsan gave an example of, going from 105 down to 46, that's more than the 50% cut down. But most people bought Tesla at that $105,000 level. And so you want to really be able to say, if you have some winners, how do you reallocate and put them back into some of the ones that didn't do as well, so that you can balance your portfolio, whether that be in or that be in in individual stocks. When you do that, there might be some taxable consequences for that, but we'll talk about that a little bit later to think about how you can avoid that as well. Now, the second thing that I wanted to do was talk about some qualified accounts that you can put your money into that also can benefit you when it comes to saving taxes. The first one that I wanted to talk about, actually before I do that, I'll skip this one because we went over this. I did want to talk about one thing actually. I get a lot of people asking me, a lot of times, especially it was earlier this year or last year, the past couple of years, well, Tesla or DocuSign or any of the other growth companies you can think of, they would be like, are these good companies to invest in because they're doing great? I mean, everybody heard about them, the revenue's going up, all of these things. But I want you to think about this from a market perspective. You have to distinguish between a good company and a good investment. A good company and a good investment. What I mean by that is, for example, let's take another example, right? Forget about companies for now. Let's just take like a car. Let's take a Ferrari. I go out there and I buy a Ferrari for $200,000, and as soon as I do, then that's what that Ferrari is worth. Okay. So now, if the value of the Ferrari goes up, how much are people willing to pay for it? That same Ferrari that I bought for $200,000, it could go up to $300,000. Would you be willing to pay for it? $400,000, $500,000? Because in some cases, a lot of the stocks that you wanted to buy were trading. Take that Ferrari for $200,000 at $1 to $1.5 million. Would you want to buy the same car at that price? Probably not, even though it's a good car. So the valuation of a company is very, very important. Not just it's a good company and that's it. Like, I have many friends. I drive a Tesla. I love Tesla. I want to buy the Tesla stock. Those are not equal, right? At what price are you going to buy the stock is very, very important. That's our job as portfolio managers to make sure that we're doing this at a valuable price. Okay, so now let's talk a little bit about, and you have to hold me to the time, okay? Inshallah. So now let's talk about traditional IRAs. Those are, again, immediate tax benefit. You put $6,000 in if you have any earned income, and it's going to go up next year to $6,500, and you would get an immediate tax benefit when you put the money in. into the account. Once you put it in, you can decide on what investments you want to make in it. The money is growing tax-free. And then when you take it out for when you have retirement or higher education, major medical expenses, disability, first-time purchase of a house, you're only paying the income tax on it because you saved the income tax in the very beginning. Simple administration, and then because you're choosing the investments you make, you can choose to make them halal. The a Roth IRA is the complete opposite. It's either you get benefit of tax now and then you pay tax later, or you pay the taxes now and you save them later, and that's what this Roth is. Exact same account, look at it as a mirror, meaning that you pay the taxes now, but the growth of it is tax-free, and when you put the money out, it's also going to be tax-free as well, right? So that's one of the things that's a benefit. The other thing that I wanted to mention was the employer plans, right? Your company might have one as a 403B or 401k. They might match you a certain amount. So do look into this as a benefit. If you have some bonus coming up at the end of the year, you can put more money away to match up to that $20,500 level for this year. Next year it goes up again. And for young people like me who are above 50, we can put more than that to $6,500 for this year. And then, so one thing to keep in mind in the 401k is that what you choose on investment is very important. We talked about that from a halal and haram perspective. A lot of companies now, right there? Okay. A lot of companies now have, excuse me, have what are called brokerage options within their 401ks. And if you have that brokerage option, then what you can do is put the money there and then buy your own investments, and you're not limited to the investments that the company is offering you. What's the benefit there? Well, the benefit is that the funds that the companies are offering you are not going to be halal, but in the brokerage account, it can be. Now, if you are yourself, or you know of somebody who is a state university employee in the state of New Jersey, in your 401k, if you go select, or 403b, if you select Voya as your provider, you can actually purchase the amount of funds. So you even only have to have a brokerage account, you can directly go into and be able to invest in something that's halal. The last thing I want to mention is education accounts, right? These are accounts you set up for your children. You're the custodian, or you're the guardian on the account. It's $2,000 per year per child. A great way, if your child is just born, you can do it for your grandchildren as well. You start putting money away. They can use it for college, but they can also use it for if you want to pay for Islamic school or something along those lines. And again, the money grows tax-free, and then when you take it out, it's tax-free as well. I'm coming to the conclusion, because a lot of this stuff, both Ahsan and Omar have talked about, and that is the two things about how to donate to charity. Number one I wanted to talk about was a donor advised fund. Now, donor advised fund is like an umbrella or a charitable organization. When you put the money into the donor advised fund, if you want to call it, it's like a poor man's private charity, a private foundation. So what you do is you put the money in, and when you put the money into a donor advised fund, it actually is putting money into a charity. So you're getting the immediate tax benefit. But the benefit is that you don't have to spend the money right away on anything at all. So you can leave the money in there for till next year when you decide what charity you want to give to. You can leave it in there for the next 5 years, 10 years, 15 years, and then really choose what give it to. The investments are made, and the account is growing at that same time. So it's a very, very good benefit to being able to do that. You take your highly appreciated assets and you move them in there to be able to save the taxes, as the previous speakers actually had mentioned. And then, so that's kind of the idea. The one last thing that I wanted to mention in this regard is what Ahsan mentioned. I want to emphasize on this, and that is that if you have any appreciated assets, whether it be because of the company you work for, maybe you bought some stocks 4 or 5 years ago, and now they're actually, even with the market being down now, they've actually gone up in value. It's a great way for you to reset your cost basis whenever you actually buy the stocks, are doing this. So how does that work, right? Assume you normally give $50,000 away in charity. So that's the assumption. You own every year, mashallah, through zakat and other things, you give away $50,000, right? So what you do is you basically take the stocks that you have that have appreciated by $50,000, and you give, rather than giving the checks, you give the stock away. When you do that, now you've saved the taxes on doing that because you didn't sell anything and you're not paying the capital gains tax. And then what you do is, now that you've given the stock away, now because your stock portfolio is down, take the cash you were going to give away and then buy the same stocks or the same funds back. Now you've actually raised your cost basis for the future to be able to save in taxes as well, right? And the last thing that I want to mention for those of you that are at the young age of 72 and you're required by the IRS to take money out of your IRA, which are your individual account, retirement account. If you don't need the money, you're still working, or mashallah, you have great kids who support you, or whatever the reason is, if you don't need the money, up to $100,000 can go directly from the IRA into a charitable account, so the charity. And when you do that, you actually end up paying no taxes, and it actually affects your adjusted gross income, and it's a very big benefit to being able to do that. It's called a qualified distribution, qualified charitable distribution. So summary, right? Number one, take advantage of tax loss harvesting. What that means is that look at your portfolio. If you have any gains that you want to sell something off of, sell it, offset it with some losses that you have. If you don't like a company, you don't think it's going to do well, but you're afraid you're going to be, there's no benefit in you selling it at a loss, there is a benefit. That benefit is in the future, if you ever have a capital gain, you'll be able to offset it. Number two is every year for $3,000 a year, you'll be able to take as far as a tax write-off as well. So if you have any losers, don't be afraid to sell them. There will be eventually a benefit for you in doing that, right? And then the other one is, donate your stock to charities if you have some appreciated assets. And the last one is to make sure you're maximizing on your qualified accounts. Qualified meaning that you're getting tax savings for being able to do that, right? Now, alhamdulillah, each one of us has been very, very succinct, and we've been giving you a lot of information. And so hopefully you'll be able to digest it. Inshallah, hopefully we'll be able to open up for Q&A afterwards. But with that, inshallah, I did want to thank everyone for the opportunity of actually listening attentively and laughing at my small little jokes that I had once in a while. And I appreciate Brother Omar, the board, the masjid, being able to do that. And I look forward to the masjid opening up a brokerage account so they can accept all of your donations of stock rather than in cash. أقول قولي هذا واستغفر الله ولكم واستغفروه.
Jazakallah khair, brother. I'm hoping now Sheikh Yasser will be able to put in some energy in this crowd. There's no one better than you to do this. Yes, maybe that's the case. Why lighting? Because I think because of the... so we can put the lighting up now. Sheikh Yasser is coming, the light is coming up. I know. Subhanallah. You know Sheikh Yasser. Everyone knows Sheikh Yasser. Who does not know Sheikh Yasser? All right. Shall I introduce? Okay. Alhamdulillah. Jazakallah.
بسم الله والحمد لله والصلاة والسلام على رسول الله وعلى آله وصحبه ومن والاه اللهم صل وسلم وبارك على سيدنا محمد في الأولين وصل وسلم وبارك على سيدنا محمد في الآخرين وصلي وسلم وبارك على سيدنا ومولانا محمد صلى الله عليه وسلم في الملأ الأعلى إلى يوم الدين. Alhamdulillah, thumma alhamdulillah. It's a blessing to be with all of you tonight in this sacred space, the house of Allah. It's good to be with Brother Munaim. I haven't seen you a very long time. How's the flying going? Are you still flying? MashaAllah. MashaAllah. Well, he should tell you the story about his and you guys watch the documentary? Flying While Muslim? How many have watched it? One person. We gotta put this back out. Yeah, we're gonna have a showing. He has a whole documentary about flying while Muslim. Isn't that what it's called? Flying while Muslim? On a wing and a prayer. Okay, that's more creative. But it was in that vein, in that general sense. But make sure you watch that documentary. It was very, very good, mashallah. And I think it won many awards. Yeah, mashallah. It was aired nationally as a whole story. Barakallahu feekum. Wow, my heart and mind are in many places, but the first thing I want to say is just that, mashallah, this country is full of loopholes. I think it's just like one big lesson is that if you understand the loopholes, you'll do well. That's really one just massive takeaway. But, but with that said, let's bring this into a deeper, more spiritual space, inshallah. Centered around the project of the Prophet sallallahu alaihi wasallam. And I say that because as I was listening to each presenter present, and if I'm gonna throw out buzzwords that were coming to mind, which is like intentional, thoughtful, sophisticated ways of thinking about money, thinking about giving. It's not just some very passe or passive way of giving, or just, the whole idea of writing a check needs to be a thing of the past. And we need to transition into a more sophisticated ways of giving. Now, first and foremost, giving in Islam, being charitable, this is fundamental. It's foundational. The identity of a believer is one who gives. You can't claim to be a full believer if you're not giving. Because the Prophet ﷺ says, as-sadaqatu burhan. Giving is proof. When you give, it's a proof of your convictions, your commitments, your dedications, and your faith. It's a proof of your faith when you give. So as-sadaqatu burhan. And Allah says in the Quran, لَن تَنَالُوا الْبِرَّ حَتَّى تُنْفِقُوا مِمَّا تُحِبُّونَ. You can't attain the station and the pedigree of a person of piety, of birr, without being a person who gives from what they love. And there's nothing that we love more than our stuff. We love our stuff. More than our children at times, we love our stuff. And because we look at it, we see the zeros in our bank account like, mashallah, look what I've created. Of course, it's like Tom Hanks when he built that fire in that movie, Castaway. You're like, look what I have created. People think, oh, look what I've generated, look what I've created, look at all these zeros. And it's nothing but the grace and mercy and generosity of Allah subhanahu wa ta'ala. But Allah is articulating to us that He understands, obviously, our nature and that we fall in love with this stuff. So we can't attain a station of piety without being people who love to give from that which we love. Okay? Now, the nature of giving in Islam, however, is a sophisticated one. The Prophet ﷺ, he instituted, during his time, sophisticated ways of giving. Fundamentally, he established the concept of the waqf. Famously, when Sayyiduna Umar wanted to give a piece of property that he owned, he wanted to give it in the way of Allah, as charity, as sadaqah. So the Prophet ﷺ stopped him. He said, احبس أصلها وتصدق من ثمراته. He said, I want you to restrain, habs, that's why waqf is also called habs. Habs means to restrain something. So I want you to restrain the principle and then give sadaqah, give charity from the fruits, from the dividends, from what this land may produce. And so subhanAllah, the process, the project, the tool of waqf, of endowing things, becomes principle in the construction of the Islamic civilization. If you really want to understand one of the secrets of the Islamic civilization from a foundational level, you have to look at the institution of waqf, because it really does set the standard and the tone for how the Islamic world expands and grows at every level, whether it's healthcare, education, public sphere, basic needs, whatever. All social programs, all rooted in the project of the waqf. So Sayyiduna Umar is the first one to be a waqif, someone who does waqf. Sayyiduna Umar is the first one. After him is Sayyidina Uthman. Many others. Actually, Abu Jabir says that every companion of means established a waqf. Everyone. Meaning, it became the standard. If you are a person of means, you have to set up an endowment. So Uthman ibn Affan, he took this to a whole other level, where he principally, his first waqf, does anyone know what his first waqf was? His first endowment? Bi'ru Ma'una. Yeah, the well. Bi'ru Ma'una. Famously, he purchased this well when they went to Medina so that it would be the watering source for the companions and the believers. But thereafter, he actually set up many other endowments that until today, the dividends of those endowments are paying off. People are benefiting from the endowment of Sayyidina Uthman 1400 years later. Hospitals that are constructed and built, hotels, farms, other wells, etc. Watering, like so much water is actually still flooding into those lands because of Sayyidina Uthman. And he's receiving the reward for it. So we have to understand that this type of sophisticated, thoughtful, and intentional type of giving is actually rooted in our tradition. This is what the Prophet ﷺ set up as a standard, as a model of giving. Now, if we just fast forward a little bit and we look at different points in Islamic history to see how endowments played an essential role in the construction of the project of Islam, if we're going to call it that, and how it became the quintessential mechanism for social and public welfare. We have the basic system of waqf is an idea in our tradition that's decentralized. And this is critical because in the modern nation state identity, which is very new, by the way, it's a very new concept, just 100 years, whatever old. This idea means that everything is centralized. So even the concept of a centralized government that controls and dictates and has kind of this dominion over all things, these are new concepts. These are new ideas. Like in the books of Islamic, sociology, they'll talk about the hudud of the dawla, the extent of what the idea of the state was. It was a far more limited role in Islamic history and even in human civilization. But in particular, I'm just talking about our identity. So the idea that the welfare of the state and the people, the populace, was a decentralized project is an essential notion. Because a lot of us today, we still operate with the philosophy that we are currently embedded within, which is the centralized government, the nation state, so that there is someone else taking care of the affairs of the masses. There's someone else taking care of the needs of the masses. That's not how Islam ever worked. It was always that the masses are caring for the masses. Always the case. And the mechanism that then was instituted is this mechanism of waqf. So you have, for example, look at an institution like Al-Azhar University, 1,000+ years old. Al-Azhar University was by far one of, if not the wealthiest institutions in Egypt for over 1,000 years. An extremely wealthy institution that had billions and billions and billions of assets that then funded the whole project of Islamic learning, Islamic education. It paid for every student of knowledge, every scholar. It paid for the this is a Saidi kakola, but this is an Egyptian. This is like an Egyptian, jubba. It would literally pay for this. You're a student, you need a new jubba, you just go. There's a waqf ready for you. You go, I need a new one, right? And that goes on. Food, drink, everything. And the scholars, on top of that, what these awqaf offered them was independence, was strength, was power. They did not have to fear anyone. They didn't have to do hisabat. They didn't have to make calculations. They spoke the truth as an inherited tradition because they were backed by the waqf. That's why you have in all the Muslim countries today, you have a skeletal representation of the historical project of the waqf. So you still have the waqf in Egypt and the waqf in Morocco and the waqf in Turkey. You still have them, but do they have teeth is the question. No, they've been stripped. They've been, declawed. Been declawed. Teeth are removed. So it kind of still does something, but it's very much now under the auspices of the central government dictating exactly what this money is for. That's why all of the awqaf of Al-Azhar were usurped. 100% of them. For example, some of you are Egyptian here maybe. You know Sahel al-Shamali? It's right now where all the fasad is happening. Like that's like high level. Like if what is it? Like Bawaba mshaf rakam sitta or something, it's a disaster. Before it's a little good. After that it's like, a'udhu billah. You gotta like ghudd al-basar if you look in any direction. You know that the majority of the Sahel al-Shamali was Waqf al-Azhar? Yeah, the majority of As-Sahel Shamali. Thousands, hundreds of thousands of acres of the northern coast was actually owned by the Azhar endowment. Where is it now? Sold to, land developers to build all sorts of whatever, right? All this happened over the past 70, 80 years, if not a little bit more, where it started to, the lands began usurped. That's it. Azhar now is what? What does Azhar effectively become when you strip it of all of its power and its resources? Becomes a ward of the state. So now Sheikh al-Azhar is appointed. The shuyukh, the scholars, like these grand scholars that I spent 8 years of my life with, literally have to go like low-level employees to pick up their paychecks. Not even a paycheck, it's just cash. A couple of thousand Egyptian pounds. They have to go to some like administrator, some person standing, and you'll have a scholar, right, who's been teaching for 80 years, go walk up and have to like pick up his paycheck like a low-level employee. This is all calculated. Stripping Islam of its essence, its identity, its power, has everything to do with how money is structured. And unfortunately, the Muslim community has no familiarity with this, so we still operate with this enslaved mindset. That's why even in the West, in America today, not just across the world, but still in the West, although we're free, we can use all these loopholes and manipulate this whole system, use all these tools that we have to build the systems and the models that will bring back our integrity. But we still operate with the same mindset. So the average, religious leader, sheikh, imam, whatever, is an employee, is nothing different than a low-level employee. Yeah, they may get some accolades, but they're still practically an employee. Whereas when you have for 1,000+ years scholarship being protected through independent resources, it's a whole other beast. That's why you'll have like Imam Sheikh al-Dardir, when he was the Sheikh of Al-Azhar not too long ago, maybe 150, 100 to 200 years ago, he was Sheikh al-Azhar. And the local shops were complaining about increased taxes that the king had placed. So Imam al-Dardir said, close your shops. Just close them down. The king starts to cry like, oh my God, this is a problem. You're limiting my, economic whatever. So he's like, okay, the king has to actually go to Masjid al-Azhar, find Shaykh al-Azhar as he's sitting on the floor with his legs out, and tell him, please tell the people to reopen. Because he's powerful. Why does Shaykh al-Azhar retain that power? What does he have behind him? Wealth. He has resources. He has the capacity to take that stand. Beyond that, when you have soft power, you have your words, but no teeth. That's the point. Now, the creativity of our tradition is very profound. In Dimashq, in Syria, Salah ad-Din al-Ayyubi, when he built his own awqaf, by the way, in the central mosque. He had a waqf called Waqf al-Halib, an endowment just for milk, because of women who have just birthed children and who need access to milk. He had a waqf. So the what's it called? The fountains. There will be fountains of milk, right? That were mawquf just for milk. You have a waqf called Waqf al-Zabadi. You have a waqf in Syria called the waqf of yogurt. You know why this waqf was made? It's so interesting. This waqf was made by a woman who did not want to see children cry. Why would a child cry because of yogurt? Because back then you would take a vessel. This vessel would be made of some like porcelain or glass, some material that could break. So if the young child is going to go to the, to get their yogurt from the farm or whatever, and the glass broke, this child would go home and have to face the ire of their parents. So it would make them cry. So there's a woman who could not handle this idea. So she wanted to give these children an out. So if you broke your vessel for yogurt, you come to this waqf, get a replacement vessel so you can go back and you're home safe, clear, with no problems. You see the degree of creativity and thoughtfulness? This is an instant. Now, you can apply this by thousands and thousands of very nuanced creative ideas that care for the welfare of society. You have a waqf. also in Dimashq, that is a massive garden for animals that need to retire. Wallahi al-azim, this is hundreds. Talk about, I mean, if someone just does this and presents this to the public sphere, they'd be blown away. So for example, let's say your major vehicle is a mule. You have a mule that you've been using for 10, 15 years. Now it's kind of aged and needs to retire. But you still need a mule. There's a waqf where you go, you take your mule, you give it to this garden. The mule now has a place to retire and die, and you get a fresh, young, healthy mule that can fulfill your needs. A waqf just for that. Just for that, right? I can go off, I can list off and mouth off. There's a waqf. Talk about masajid. There's a whole, like, by the way, all these are preserved in a lot of the documentation or history. There is a waqf just for the bukhur of masajid. And I want to bring that up because it's exciting, right? Just for the bukhur of masajid, there's a waqf. Because the Prophet ﷺ, he actually started the process and the project of doing bukhur in the masjid. There was a man by the name of Abu Nu'aym al-Munajjim. This is someone who just, his business was to do bukhur. So you had a waqf just for bukhur. You know you had a waqf in masajid for masahif? A waqf, an endowment just for masahif. What does that mean? Practicalities of it, because it's all in the details. This means that there is a waqf just to make sure that the masahif were orderly, organized, put up. Like if someone left a mushaf, the waqf would take care of that. So there'll be someone who has to fulfill that mission. Rebinding the masahif, putting oils on the masahif, right? Renewing, bringing new, a waqf just for that. I can go on and on and on. The Ottoman Empire is very interesting when it comes to awqaf because of the following. You know, 75% of the endowments during the Ottoman Empire were put up by whom? By women. You know why it's the case? Because women had far more disposable income than men did. They had far more disposable income. So 75% of the endowments were put up by women. So you have endless endowments in the Ottoman Empire to care for birds, care for kittens, care for dogs, care for this, care for that. So many endowments that exist just to care for animals, to care for children, for shoes, for pants, every subtlety you can think of. So the moral of it is the following. If we want to establish our civilizational capacity in any way, shape, or form, it has to be done upon these foundations. We can't continue the very superficial, low-level model, you know, super centralized, always deferring to others, you know, to take care of the affairs, and then assume that somehow we're going to have an awakening. That's not how it works. It's literally every single one of us coming with our creative thoughts, our ideas, our sense of needs, funding our affairs, our institutions. It's unacceptable for our institutions to be governed the way they, you know a masjid of this size, just not too long ago, right, before the modern nation state was developed, it would have a religious staff in the dozens. Because you would have multiple mu'adhins, you would have a scholar to teach each madhab, like each subtlety. So you have a scholar just for the Shafi'i, scholar just for the Hanafi, scholar just for the, you would have a scholar for each madhab. You would have many people leading salah, you would have all that. Do you think today with our system, we will ever get to that point with just the constant fundraising and then like the employment of, you can't. And we're faulty in our conceptions thinking, oh, we are going to have an awakening and a revolution if we just hire the right person. That's not how it works. It's not about people. It's not about one person. It's about a cadre of people who are serving. You have everyone fulfilling their needs at every level, whether it's the scholarly level, the social level, and that all comes down to us. And I think that the fact that we have been blessed with this system of waqf to be a foundational quality of our Islamic civilization should really make us rethink what we're doing right now with our wealth, especially when we are such a wealthy community that has so much disposable income. Spending that money. Either we're not spending it at all, or we're not spending it wisely. You know, I'll close with this. You know why Yale University is named Yale University? Right? Some guy, something Yale. In the 1700s, they basically had a bid to see who's going to give the greatest amount of money as seed money for a university, as an endowment. And it was this guy named something something Yale. You know how much he gave? In 1730s or something? He gave $500. You know how much Yale's endowment is today? 30-something billion dollars, right? Princeton's is 40-something billion. I think Harvard is the biggest, something like, it's close to $50 billion. And they all started the same way, right? And so that's, if you want to think long term. And by the way, Harvard started off as a religious institution. It wanted to train clergy, right? Not a bunch of atheist, anti-religion, anti-whatever stuff that you see today. I'm talking about real, they wanted like clergy. So may Allah subhanahu wa ta'ala help us, and I know I need to close. May Allah help us to feel a sense of dignity and honor in our tradition. And we really need to go back to our tradition. We need to stand on the shoulders of our tradition. We need to build our community on the da'a'im and the framework and the paradigms and the foundations of our tradition. May Allah grant us tawfiq, and may Allah show us truth as truth and bless us to follow it, and show us falsehood as falsehood and bless us to stay away from it. May Allah subhanahu wa ta'ala inspire us to follow that which is most pleasing to Him. May He allow the best of Spirit's initiatives to govern and guide our community. May the best of the best guide us. In every juncture, may we have the best of the best guiding all of our decisions. Allahumma ameen. Barakallahu feekum wa jazakumullah khair. Wa sallallahu wa sallam ala Sayyidina Muhammad wa akhiru da'wana alhamdulillahi rabbil alameen. What was your question? Quickly, I had an answer for it. Yes. Oh, can I just answer this? What are the benefits of giving during your life? Yes, because you can, as Omar, I think you spoke about the wasiyah, you can put a third as a wasiyah. Wa thuluthu khair, that's good. But every command of giving is a dunyawi command, right? All the commands, so if you want to actually fulfill the command of giving, you fulfill it fundamentally by doing it when you're still ala qayd al-haya, when you still have a conscious mind that can actually, function. So it's great to give as a wasiyah. It is far better and far more prioritized to give while you're still alive. And you sat with high net worth people, I have as well. And there's plenty of high net worth people that I know who are holding on to tens and tens of millions of dollars with the idea this is what my children are owed. And I have told these people, I say, you think your child is owed $100 million? Can I be your child? What are you talking about? It's like, you can give your child a fraction of that and they will be more than sufficed, right? No one is owed $100 million. No one is owed $40 million, right? You give them something and you spend your money fi sabilillah. Why would you not meet Allah having spent $40 million rather than just giving it to your children? Who knows what they're going to do with it? Wallahu a'lam.
Barakallahu feek, Sheikh. See, this is why we wanted to have this event. It was meant for this. We really thought, rather than having a fundraiser, we need to educate our community. Starting next year, inshallah, this is the direction we're going to take as Al-Falah, and we're going to push for it. We're going to have a structure of Al-Falah that will be one of the most successful Islamic institutions in the United States of America. And inshallah, we'll do it. We do it. We will do it. We need you, all of us, a village. We need a village to build this masjid, this community, to build our institutions, and also be an example for other institutions, inshallah, to do that. And one thing I would say very quickly, Sheikh Yasser was talking about endowment, right? The state, how they can involve and their limit. We don't have that. Take advantage of it. We don't have that. This is our opportunity as a Muslim community living in the United States, where the state cannot get involved in our affairs, religious affairs. Inshallah, jazakumullah khair. Wassalamu alaikum wa rahmatullahi wa barakatuh. Wa jazakumullah khair for coming, for supporting this. And we hope to see you again, over and over again, with those educational seminars, and hoping, inshallah, we all learn together to become successful. We shoot for the skies. We shoot for the stars. We get the moon, it's fine. Let's shoot for the stars. Jazakumullah khair. Wassalamu alaikum wa rahmatullahi wa barakatuh. And then will be question and answers. inshallah, and we'll be able to answer. Jazakumullah. There is food, so we want to do it. We can eat and ask the questions if that's something that, because Isha is at 8 o'clock, we can do that and move forward. And the last thing I want to say, if anyone, at least there is no structure, you don't have structure, we don't have structure, inshallah, let's start at least with tax deduction. And anyone who wants to donate this today, inshallah, we have everything outside, inshallah. But we promise we're going to have great structure all together, inshallah. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.